Welcome to FLB YouTube channel, this time with a playlist about different kind of distribution models for the financial model. So today we will talk about the simple distribution model, what I created here. So basically it's you have to distribute, for example, this amount of money. So you have to distribute 380,000 units of currency, whatever your currency is. Then you need to think about what kind of variables do you need. So I used here 3 variables, so reserves, income, and OGX. Income per LC, so it's based on what the LCs are really, how they are performing, and how is their financial wealth. So the wealthier an LC is, the more the LC must pay. This is the basic. Let's start with the reserves. So we have here 5 LCs, for example, and some LCs are quite rich. So reserves, and here is the equity. So the equity including the profit or loss of the past term. So it includes the past term. So this model needs to be calculated after the term, when you know the profit of last term or last financial year, depending on of your term and financial year. So in the reserves you have the entire equity, so the profit of last term and the profit of the past terms. So if you have an LC which was quite rich 3 years ago, but afterwards never really performed, nevertheless I think this LC should be taxed and also pay out of the reserves they made 3 years ago. So maybe you have some LCs with which are in debt, so therefore you cannot really distribute money here, therefore here's 0 standing here. But in the end we have 3 variables, and you know exactly how much you have, so how many reserves the LCs have, how many income they have, so you have the totals. And you can see here IGIP is the highest, therefore the part of IGIP is 58%, is the highest. Therefore most must be distributed from IGIP income. Okay, how to do that? So now you know 58% was out of these 3 numbers, and to distribute 220,000 according to this formula. Now you know the number what you need to distribute per LC in this variable category. So you see, for example, okay, we have LC1 has a lot of money and so on and so on, and according to this, so 150,000 divided by 625,000, you get this percentage, and in the end you can calculate how much money this LC needs to pay in this category. This needs to be done in all categories, so of course you can make more categories if your national plenary says, okay, we want to have more categories or other categories. This is just a template, what you can see here. Afterwards, you just make an overview what the LCs need to pay per each category, and you have the total payment, and in the end you have, okay, the percentage, how much the LCs need to pay. The good thing is about this model, it's completely variable, so you have no part which needs to be distributed equally, because each equal distribution is not really fair, because this distribution is not based on the financial health of the LC. A good advantage of this model is the simplicity. I mean, it's quite simple. You have some your variables you need to discuss during the legislative meeting, figure out the good ones, and that's principally it. Okay, if you want to download this template here, click on the link below the video so you can download it. Next, in today's we will discuss the distribution model about the tax model. So see you next video.